Funding for Inner Compass is provided by Calvin College.
The life that's unfolding,
the world that awaits,
gifts that are yours to explore,
and God's to use.
It's all happening here at Calvin.
Welcome to Inner Compass. I'm Karen Saupe. When I was young, investing my money was easy. It was a matter of discipline and willpower. Now that I'm older, I have more difficult choices to make. The piggy bank's full. Our guest today will help us consider some of the choices we have to make in bringing our values to bear on where we keep our money. Join us on Inner Compass.
From the campus of Calvin College, this is Inner Compass, exploring how people use faith and ethics to guide them through critical issues of today.
My guest today is business professor Leonard Van Drunen, who teaches corporate finance, investments, and strategic management at Calvin College. He has worked in investment banking as a managing director with J.P. Morgan in New York, Tokyo, and London, and with Merrill Lynch in New York. Welcome, Leonard.
Thank you, Karen.
The origins of socially responsible investing, or SRI, often described as coming along with, in the late 70s and early 80s, with boycotting South African investments in protesting apartheid. It must really go back much earlier, don't you think?
Yeah, I think it goes back to, as long as people have been alive and there's been investing, people have always thought about, well, how can I take my values into my investing life, into my investing framework? Of course, more recently, in the last 10 years, it's really taken off in the United States in terms of numbers, in terms of the options available to investors and the number of people that have been doing it. Recent data from the Social Invest Forum says that there's about 10% of professionally managed money in the United States, that's about $2.3 trillion, is invested in a socially responsible way. So it's really taken off. Of that $2.3 trillion, about 10% of that is available to people like you and I, individuals that can invest in a variety of mutual funds to accomplish the goals that we want, depending on our values.
Okay, so really the recent development is the structuring, the formal structuring of investment funds that are designed to target particular areas or to screen out particular areas, right?
That's developed over the last 10 years as many aspects of the financial markets have developed. The number of mutual funds generally available to people has increased, and so has the socially responsible investing options increased as well.
And so have the choices. It's complicated enough that I think when you get your package of brochures and new funds developing by investment companies, it can be overwhelming. It sounds nice. It sounds simple and easy to sort of say, okay, I'll choose the SRI, and that must be a good thing. What I'm beginning to realize is that different socially responsible funds have different criteria.
Yep.
The point first is to do no harm while we try to grow our money, but also then obviously to have a positive social impact and align our investment with our values. Can you make any money investing this way?
And that's been a debated question actually over the years, and still is a debated question. There's been approximately 50 studies done to try to answer that question. And the theory, there's two types of theory. One theory says, well, if you're investing in a socially responsible way, meaning you're not investing, for example, in tobacco companies or companies that produce alcohol or companies that do gambling, then probably you're going to make less money because these are profitable activities.
Sure.
That's one theory. The other theory is that if you invest in a socially responsible way, you're doing the right thing, you're supporting your customers, your employees in the right way, you're taking account of all shareholders, and in the long run or medium run, if not in the short run, that will lead to higher profits. So these are the two competing
because of
theories.
Productivity and happiness and sort of contentment with the job.
So these are the two competing theories, and there's been about 50 studies, empirical studies, looking at actual results to determine which of those two is right. And it's mixed results, frankly. There's still a variety of opinion. However, recently there's been a study done by two professors at the University of Iowa and a professor in Australia, and they looked, it was sort of a meta-study or a meta-analysis. They looked at all these 50 studies and used some sophisticated statistical techniques, and their conclusion is that socially responsible companies that act in a socially responsible way make better returns than those companies that do not. Not a lot better, but some better.
Really? Okay.
So what I take away from that is that I can invest socially responsibly and make at least the same return that I could if I was investing in not in a socially responsible way. So I like the results of that study.
Yeah, because if you have conflicted values between personal greed and the desire to make the world a better place, you might have a win-win situation.
Yeah, so I think it's a win-win situation here. Okay. I don't think you have to pay a big price or really pay any price to invest socially.
Good, okay.
In a socially responsible way. Of course, I as a person or you as a person might choose to do that anyway, sure. But I don't think you really have to do that in this case.
Well, that's interesting. What are the forms socially responsible investment can take? Screening, I know, is one. Positive or negative screening. Could you tell us a little bit about that?
Yeah, most people put socially responsible investing into 3 different types or 3 different buckets. The first one, as you mentioned, is screening. The second one is advocacy, and the third one is community investing.
Okay.
And so in that order, screening means that you invest in companies, or your mutual fund that you invest in companies that do certain things or don't do certain things. So there's sort of the positive and negative screening. Positive would be you invest in companies that are socially responsible, that take kind of the stakeholder view of the firm, meaning not just trying to make the most money for the shareholders, but also considering the employees, the customers, the communities they do business in, the pensioners, and produce products and services that are valuable and useful to society. That's sort of the positive screening. The negative screening is don't invest in companies that do things you don't like, bad things like gambling, tobacco, alcohol, pornography, abortion, those kind of things, depending on your values. And there's a full range of maybe 200 different socially responsible mutual funds, and they all use some aspect of screening, or most of them use some aspect of screening, and you can find the one that fits your particular belief or faith. So that's screening. The second type of socially responsible investing is advocacy, where you would own shares in a company, or the mutual fund that you invest in would own shares in a company that would advocate for that company to do the right thing. So voting at shareholder meetings, or bringing resolutions to the shareholder meetings, or meeting with management to try to convince the company to act socially responsible. So that's advocacy. And then the third type is community investing. And that's investing in mostly nonprofit organizations that provide financing for community development activities. Of those 3 types, the first one is by far the largest in terms of numbers. The second one is the second largest, and community investing is the smallest, but it's growing.
Let's go back and look at each of those. Screening, positive and negative screening, sounds brilliant to me until I stop and look at the details. And I've looked at some funds, and first of all, I mean, it's kind of mind-boggling to look at how complex these screening mechanisms are, but if I'm looking for something that's consistent with my values, maybe I get 9 out of 10. Maybe I agree that I don't want to invest in gambling or alcohol, but I come from a family of tobacco farmers. Right, so how do I divide that up? I know some of the funds promote, say, what is vaguely called family values. Some funds promote the empowerment of women. Some funds promote both. Some funds exclude one or the other. So making those decisions about which things are on the list, are there funds that are pretty specifically targeted to just a few? Are there funds that try to cover 30 different criteria?
Yeah, there's a full range, just like there's a full range of people with different values. And so you need to do your research and look at the funds. There's funds that, there is different categories of funds. There is funds that are more focused on the environment. And so if you're very environmentally focused, those would be good funds for you. There is funds that are, so the Sierra Club, for example, has a mutual fund. There is funds that are sort of the mainstream focused on the criteria I mentioned earlier in terms of the positives and negative screens. So that's where the bulk of the money is invested. But you're not going to get, for example, I would like to invest in a fund that doesn't invest in companies that support abortion, for example. And that's not really a screen in most of the funds.
Right.
There's some explicitly Christian funds that will not invest in companies that perform or support abortions. So, but that's a very small subset of the funds.
And I
So
would
the
think even
Mennonite
within
Mutual
Christian
Aid
funds
Society
there might
or-
be different values
well,
screened, right?
yeah. So you might be able to pick up a fund from Mennonite Mutual Aid or from Timothy Funds that doesn't support abortions, but maybe they do invest in some other things that you'd prefer they didn't, like firearms or weapons, so, for example. So
Sure,
there's
yeah.
so you can't probably find the perfect fund for every person. To do that, you would probably need to do your own research and invest directly in stocks that you liked, but that's of course time-consuming and not very cost-effective and hard to diversify that way.
I
But
worry about the funds that sort of have this blanket label of socially
most
responsible.
of the funds are pretty broad. They're trying to appeal. I mean, these are for-profit, by and large, for-profit mutual fund companies. They're trying to appeal to as broad investor base as they can because there's efficiencies. A larger fund with more investors in it is going to be more cost-effective. One of the things about mutual funds that you need to pay attention to is what's the expenses of the funds, because you're paying that in addition to the returns you're earning. You have to pay the expense of running the fund. A larger fund can spread the fixed cost over more investors and run on a lower expense ratio. So funds like to be to grow
broadly based, okay,
and to appeal broadly. So that's one of the challenges. Another challenge with the screening is, let's take an example of alcohol. So many funds will not invest in companies that produce and sell alcohol. For example, will not invest in Anheuser-Busch, for example. The fund I invest in, it does not invest in Anheuser-Busch, does not invest in weapons. For example, doesn't invest in Boeing, which has a large defense business. So that's pretty clear, but what about Walmart? Does the fund invest in Walmart, which of course makes some portion of its profits from selling alcohol and guns? Well, it does invest in Walmart. So, where do you draw the line is a big question.
Right.
And everybody's going to have
companies
their,
that invest in other companies.
Yeah.
Sure.
Yeah. So, are you okay with investing in Walmart, even though they do sell, a certain tiny percentage of their sales is from guns and alcohol? I'm okay with that, but everybody has to reach their own conclusion.
And I have a tendency to sort of think, well, if it's just a little bit, I can live with that.
Yeah. I think most people are like you.
Advocacy or activist investing, this is where it gets hard for me. I get my proxy ballots and toss them. I figure, okay, there are only 5 candidates, there are only 5 openings, there's no real choice here.
Yeah.
I'll catch you next year. And yet there are stories of advocates, small stockholders even making a huge difference in the turns that companies take. Can you tell us about that?
Yeah. Well, yes, that's definitely the case. Of course, if you as an individual get your proxy and you want to make a big difference in a company, you're going to have to probably quit your day job
and go to the meetings
and go to the meetings
research.
and spend a huge amount of time on it. But if you invest in a fund, a mutual fund, where the management of that fund has an explicit goal to do that advocacy on your behalf, they collect the votes from all their shareholders, of course, and so they do that. Then that's a way that you can indirectly,
hand over the
vicariously,
responsibility to someone I trust.
Do advocacy. So that's the idea behind the advocacy funds.
One of the more interesting stories I read was Ben & Jerry, the ice cream company. When they were bought, there was a group of socially responsible investors who hoped to pool together and buy the company, and they failed to do so. And Unilever bought the company. But they were able to put enough pressure on Unilever that it affected their policies for the company in terms of green, ecologically sound decisions and so forth. And so even though they failed, they succeeded in shaping the future of Ben & Jerry's. Yeah,
there's been a rise in shareholder advocacy in the United States and in other parts of the world generally, not only for socially responsible causes, but just for whatever cause the shareholder wants. And so companies, large companies are becoming more aware of minority shareholders and are becoming, in general, more willing to listen to minority shareholders' views and, in Unilever's case, in this case, incorporate that. Probably because, I don't want to say anything bad about Unilever, but probably because they realized that part of the value of Ben & Jerry's was its socially responsible view of the world, and so they wanted to preserve that.
Smart business.
Smart business to preserve that.
Okay.
Exactly.
Well, and maybe that's it in the long run, that all these decisions. I read recently that there's a whole lot more green building happening from companies who are recognizing that it's in their best interest as businesses to be promoting that.
Yeah. Customers, they're finding customers are demanding green buildings, so therefore they're building green buildings.
So even though that might be more expensive or less cost effective in the short run, it may give them more overall support.
Yeah. Well, let's take the example of Toyota, who's building, and other companies who are building hybrid vehicles. It costs more.
Right.
And why are they doing that? Well, they're doing it, I'm sure, because they think they can make a profit doing it. Obviously, it's also good for the environment, but it's still profit-driven.
Sure.
Yeah.
There's a website, asyousow.org, that is sort of a watchdog site that provides information for investors who are interested in just discovering what the issues are and where. And I've been surprised and I guess pleased the few times that I've taken the time to write to a company about their policies, have always gotten answers and sometimes detailed answers. I remember writing to, I think it was Nestle years ago, about fair trade coffee sales and so forth. And the answer I got back complicated the question for me, because what I'd heard is fair trade coffee is good and we should all be buying it, and period, end of story. And they wrote back a really rather nuanced reply. I mean, it's a form letter, but explaining why they tried to work more directly so that I don't remember all the details anymore, but they had reasons, and really I think defensible reasons, for the policy that they were using at the time.
Most large companies now have a few professionals who are responsible for the socially responsible aspect of their company, and mostly that would be a communication role to help the public understand what that company is doing in a socially responsible way. But it also could be a decision-making role in the company to help that company make more socially responsible
You hope it's
decisions.
not just spin.
Yeah, I think it maybe some cases it is, but in most cases I'm sure it's not. I mean, the companies are understanding that this is what their customers and shareholders want, and it's also consistent with good business, and therefore are trying to figure out, well, what to do about that. I mean, you have to remember the numbers I mentioned at the beginning. There's about $2.3 trillion in the United States, which is being managed in an explicitly socially responsible way. That is, the beneficiaries, the owners of that money, want it invested in an explicitly socially responsible way. And that's about 10% of all invested funds in the United States. So if I'm the chief financial officer of a company and I'm looking at my shareholders and bondholders, I have to assume about 10% of them actually care about me being socially responsible. So it's still a minority, but it's significant.
Minority.
You can't ignore it. So that's a fun dynamic to see.
The third category is interesting to me. I'd never thought much about it, but community development investing, investing locally in projects that you can, that not only are socially responsible, but that you can really keep a close eye on.
Yeah. So that's the smallest of the three main categories, but it's still significant in terms of actual dollars. And that category represents those mostly nonprofit organizations that have been set up to serve mostly the financial needs of poor people, underserved people. So this might be an inner city area that is not being served by the mainstream banking market or housing market, for example.
I'm not going to make a lot of money contributing to this, but this might be part of my charity each year.
This is not charity. I mean, it can be. Let's take the example of Inner City Christian Federation here in Grand Rapids. You could watch that organization build houses, train people how to be homeowners, provide financing to homeowners, so forth. You could watch them do that. That's fun. But you could actually donate, just give them some money. But in addition, you could lend them money. They have set up some sort of revolving facility where you can lend money to Inner City Christian Federation, and then they will use that money for constructing homes or possibly lending to some families that are occupying those homes with a rate of return, and you'll get repaid. So that's
I invest in that just as I would put my money in a money market fund or a,
exactly. So that's a local example of a broader thing going on nationally, and that's becoming more and more popular. And there's a lot of channels to do that. You could spend a lot of time exploring many of those possibilities, but that's out there as well.
And it seems to me that it might be more likely that I would pay close attention to the details if I were investing locally.
Yeah, well, it's fun. it's fun to do local socially responsible investing because, well, you can drive by on the way to work
and see the fruits of your
see some investment. Of the
sure.
maybe houses or whatever the funds are used for, and say, well, yeah, I was part of that.
Okay.
So it's more fun.
There's actually a fourth option that is small but maybe interesting to talk about: venture capital investing in beneficial upstarts.
Well, venture capital is a pretty big field generally, and of course it has its socially responsible little element as well. And venture capital is basically investing money in startup companies. So if you're particularly entrepreneurial and feel like taking some risk with part of your portfolio, more risk than you otherwise would take, then that might be a good avenue for you as well, where you would invest some money in some small companies that are starting up to, on a for-profit basis, to serve some need in the community. So that's definitely another possibility. It's not as mainstream in terms of ease of doing it. So if you're doing the first two categories, screening and advocacy, you can go to this website, www.socialinvest.org, for example, and you can pull up about 100 or 200 mutual funds that do socially responsible investing. You can see the names and how big they are, and figure out their recent performance and what screening they do, positive or negative screening they do, and pick the one you like. Go to the website, call them or contact them, and and quite easily put some money in that mutual fund. Whereas the venture capital and community investment types are a little more mechanically, you have to do a little more research to do it.
Sure. One of my questions, and I think you've answered it, is does this even make a difference? Does SRI even matter? And I think it does. Maybe not a huge difference, but a significant one.
Yeah. Well, I think so. You might ask someone, why do socially responsible investing? I mean, what's the point? And for me, the answer is, well, I do investing, and I'm a Christian. So if I put those two together, I need to seriously think about socially responsible investing. We don't have any sort of carve out that says, okay, I should act as a Christian in my relationships and in my work and in my play. But my investing, well, that's not Christian, so I don't need to think about that. No, that we don't have that kind of carve out.
Right.
So if I'm an investor and I'm a Christian, I need to think about socially responsible investing and how can I use my investments to make a positive difference in the world. So for me, that's where I come from. And if I can, and once I make it past that step, then I need to think about, okay, what's the best way to do it? Look at all the alternatives, figure out what I'm passionate about, and focus on those. And hopefully I can do that in a way that also makes a good investment return for me, and that allows me to balance my portfolio between equities and bonds and money market funds as I think is appropriate for my risk profile, and make a decent return.
It's possible to focus so much on investing, which for me is a small part of the money that I deal with. Most of the money in my life is the money I earn at my job and the money I spend on groceries and housing and gas and so forth. And so those, I think maybe spending practices have more impact even than whatever. I guess it depends on how much money you have to invest.
Yeah. Well, it's really two sides of the same coin: is socially responsible investing and socially responsible spending.
Right.
Because that's the money matters in your life, and if you're very focused on socially responsible investing, have all your money invested in a socially responsible way, but your spending habits are completely not socially responsible, patronizing companies that are not at all acting socially responsible, that you excluded from your fund, but you're happy to be their customer. Well, that's sort of an inconsistency, I think.
And not in terms of going to buy things that are bad for you, but to buy things from companies who themselves invest or make profit from things that are bad.
Of course, it's hard to do. For example, I personally, in the fund, that socially responsible fund I invest in, it excludes weapons. Okay, and I'm happy about that. So Boeing is not one of the stocks it owns; it excludes it. But when
Where do you get your plane ticket?
When I fly someplace, I'm flying on a Boeing plane, and I'm kind of
and you don't
happy
really
to do
have a choice about that.
I don't complain about that. So it's hard to be totally consistent on both sides of that coin. But something you should think about.
Sure.
Yeah.
Sure. I mean, I think sometimes the complexity of, for me, the fact that I know that companies I invest in invest themselves in other companies, and the web is so tangled that it's probably impossible to do pure socially responsible investing and spending, right?
I think it's impossible, but that doesn't mean don't do it. Just because you can't obtain the perfect ideal doesn't mean we shouldn't try to get there as close as possible.
Sure.
So.
Are you happy with the investment choices that you've made, or do you keep coming back to revisit them and reconsider them?
Well, one of the challenges with socially responsible investing is, although the choices are much better now than they were, say, 10 years ago, it's still limited. It's hard to invest across the board in a socially responsible way. That's one thing.
Sure.
The other thing is that socially responsible mutual funds tend to be smaller than the large mutual funds that you might get at Fidelity for Merrill Lynch, for example, which have billions of dollars invested in them. A socially responsible fund might only have $25 million. The one I invest in only has $25 million in it. So the expense ratio, the expenses associated with that investing are necessarily higher. So the financial performance of that fund after expenses is a little lower, a little lower than kind of the benchmark that you would like to attain. So that's one of the challenges, but I'm okay with that.
Good.
Yeah.
Thank you. My guest today has been Professor Leonard Van Drunen, who teaches corporate finance, investments, and strategic management at Calvin College. I'm Karen Saupe. Thank you for watching Inner Compass.